Hey, what's up guys? John here. Investors are buying 30 to 40% of all single-family homes in America right now. And I believe we're going to walk into a massive shift inside of the residential real estate market that everyone should pay attention to.
Big-time investors are jumping in the mix. They're snapping up single-family homes and converting them into rental properties.
According to Redfin, nearly a quarter of single-family homes here in the county were purchased by an investor.
If you're a renter, a homeowner, or a real estate investor, follow the trends because these trends are going to reshape everything we know about housing in this country, and it's happening so damn fast. It's unbelievable. Mortgage demand jumps as rates drop. Home purchase activity saw a surge last week after long-term mortgage rates fell for the first time in 2 months.
After the first interest rate drop in more than 2 months, mortgage applications to purchase a home are on the rise.
I've already relocated my entire family from Florida to Ohio because of this major shift. I'm going to break down kind of what I'm doing because I think that what we're walking into is a gold rush. It's a major, major opportunity for those that are really, really paying attention to not just the real estate market, but inflation, to the labor market, and to what the government's doing, and putting them all together. You put everything together, it's the ingredient of a massive, massive opportunity. That's what's happening. So long-term mortgage rates fell over the past week, reigniting demand for home purchases and breathing new life in what has been a stagnant housing market. The Mortgage Banker Association on Wednesday reported that mortgage applications jumped 6.3% over from the week before, driven by an increased purchasing price up 52% from a year ago. So the surge in purchase applications comes as mortgage rates fell for the first time in 2 months, MBA noted. Still, a decline in rates was only slight, and the affordability crisis continues to drag heavily on the housing market. Well, inflation data and the real inflation that people are living through right now is putting people in a position of concern, wondering, what is this cash going to mean in 5 years? And they're looking for ways in which they can invest that money, and they're doing it in real estate. But I think certain markets are going to really be the beneficiaries of this money, and other markets are probably going to see a lot of price corrections. We're going to see a lot more price reductions from home sellers trying to unload inventory. So right now, 32% of all home buyers are paying cash. That is wild, 32%. And now there's many places where these investors right now are looking to acquire cheap homes. And because they're looking for a hedge against inflation, and they're looking to be able to get a return on their money, and they're looking to own property. So they're able to kill basically 3 birds with 1 stone. Detroit, Michigan, people say, look, that's a disaster. I was in Detroit a few months ago. The downtown area is actually really nice. It's revitalizing. It's coming through a really, really big change. And I think we're going to see a lot of investors stepping in Detroit. Iowa, Toledo, Cleveland, Rochester, Louisville, Baton Rouge. I've driven through most of these areas. They're not bad at all. Like, a lot of them are the areas in which I've driven through. They're decent areas. Like, they're modernized. They're getting modernized. And so when you have 100K homes, what are people going to want to do? They're going to want to buy affordable homes. They're going to want to buy affordable housing. But who's buying them? They're all cash buyers. And what are these cash buyers going to do? You think they're going to keep the rents the same, or do you think they're going to increase them? We all know the answer to that question. They're going to increase rents. Just look at Facebook. Look at a lot of these corporations. Initially, prices were very, very low. And as they gathered market share, they increased the prices, even though their costs really haven't changed that much. The same thing will be happening to these entry-level properties. The same thing. Here, for example, what percentage of homes, I saw here because they mentioned Ohio here a couple times, what percentage of homes are all cash in Ohio? In Cleveland, 43.6% of homes are all cash. In Cincinnati, 36.6% of homes all cash. In general, the number of people paying homes in cash has increased since 2020. In February 2024, 34.5% of all homes in the United States are purchased with cash. So you start looking at this scenario, and then you start kind of just doing the numbers here. Look at it from the perspective of just inflation. Forget the real estate aspect, and then you'll start to come together and realize exactly how ambitious this real estate buying spree is going to be. Imagine being seriously injured and missing out on millions in compensation just because you didn't know where to turn. Many law firms settle for low-ball offers, leaving victims with far less than they deserve. It's frustrating, unfair, and sometimes they even charge you before they win. That's where Morgan & Morgan comes in. America's largest injury law firm fights to get the clients the compensation they deserve. And the best part, you pay nothing unless they win. They've won $12 million in Florida, 34 times more than the insurance offer, and $26 million in Philadelphia, 40 times more than the insurance offer. Prior results do not guarantee a similar outcome. Features no upfront fees unless you win. Over 1,000 attorneys and a dedicated legal team to fight for you. They handle everything for you, and it's incredibly easy to start your claim. Your injury could be worth millions. You can visit the link in the description box below this video to start your claim today. They say the average price per square foot to build right now is $150. That's very, very conservative. I'd probably say it's probably closer to 200, but let's just go with $150 a foot. If it's a 1,500 square foot house times $150 a square foot, not including cost of land, it's $225,000. $225,000. If you add the cost of land, say you get the land for $25K, right? Probably going to pay more than that, but say you do. That's $250,000. If there's tons of these pre-existing homes for under $100,000, who wins? Is it going to be the builder and developer paying $250,000 a unit, or a house, or a townhouse, or a condo? Or it's going to be the one that purchased a home for $100K or $80K, and they're renting them out looking for the same tenant? So obviously going to be a low-cost provider. They're going to be able to make more money. They're going to be able to, they're going to have more pricing power. They're going to win the game, right? And that's what it's about. So when you have this scenario, this dynamic unfolding right now, coupled with this major push from the government. This is on the HUD website, U.S. Department of Housing and Urban Development. HUD announces $30 billion investment to keep American families housed. Today, the U.S. Department of Housing and Urban Development, HUD, announced $30 billion in renewal funding for the Housing Choice Voucher Program. This funding will help public housing authorities continue to provide assistance to families and individuals who are in need of affordable housing options. It's going to be Section 8. These Section 8 landlords are going to absolutely crush it the next couple of years. That's my bet. I don't see how it doesn't happen. For example, I'm closing on 4 transactions. I already closed on 2 of them, and I have another one closing on Monday, another one closing on Wednesday. Of these 4 transactions, total purchase price will be about $330,000. The average home in America, according to Forbes, $495,000. Those 4 properties for $330K should generate roughly $6,700 every single month on the Section 8 program. Now, if I were to go market rate, maybe I'd get a little less, maybe I'd get $6,000. Regardless, that's absolutely unbelievable on a $330,000 investment to pull in $6,000 a month in gross income. Now, people say, John, you got expenses. You're right, I do have expenses. The insurance, between $550 and $700 per year on those 4 as an average. So that, maybe it's costing you $40 a month, $50 a month. Then taxes, between $180, $190 a month. So all in, call it $250 a month. If you're renting it for $1,500 and you have $250 of cost monthly, you can pull in $1,250. And you might have problems, right? You might have some issues that come and go, but you're all in for $80,000 on the house. How do you lose? You don't lose. Of these 4 deals, 2 of them I bought directly from the government, foreclosures. The other one, it was a seller in Australia who was just tired of managing the property. Got this deal for $60,000. The house across the street, the seller just listed it for $110,000. $60,000 deal. I'll probably rent that thing for $1,400, $1,500. I'm going to give you the full tours and show you kind of what I'm doing. And people say, why would you do that, John? You're in Ohio. Why would you show people what you're doing? Because I think there's a lot of opportunity for people to make money in all different parts of America. And I want to help people learn about this because I think that where there's massive wealth building opportunity, a major shift, and if people aren't investing, someone else is, and they're going to use their investment to make your financial situation worse. They're going to increase rents, I can promise you, as these large institutions really start to acquire market share. So you could, some of these homes for $100,000, you can go put $10,000 down If you wanted to just live in one of them, $10,000 down, maybe your mortgage is $750 a month. Right? That would be your mortgage. The 4 properties that I'm purchasing, there won't be a mortgage. But if you put $10K down and you took a $700 mortgage out, if you're living in almost any city in America, you're probably spending twice that on rent, right? So if you go there and you work from home and you save up and you buy another house, these homes, I believe, are going to be worth more in the future. I think there's going to be a high likelihood, a high probability that there's going to be more investor demand to acquire these entry-level homes, and it's going to continue to basically keep a floor on these property prices where they are now, and likely continue to just go up as more and more people chase yield against inflation and look for a safe place to invest their money. And the government's going to say, look, we don't want you renting to market rate. We want you to rent to us. We want to fill the Section 8 program. And so that's why the Section 8 housing voucher program, they're paying 10%, 15% more in most markets than entry level and market rate. So some people will say, John, you don't want to rent to Section 8. I've heard horror stories. Look, I was a real estate agent in Beverly Hills from 2009 to 2019. I've dealt with so many different types of personalities, people that, renting 20, 30, 50,000 on houses, and degenerate, some of them. Like I had one guy that I'm not going to give any information to where people would know who he is, but he was in the World Series and extremely famous. He wanted to rent a house for damn near 50 grand a month. And you start diving into his financials, you realize that most of it is audited and fake. And he wasn't who he said he was, right? So his financials were a complete lie. So you start to see that across the board, from high net worth individuals that are kind of pulling some shady stuff to lower level, lower income level individuals, same type of thing. It all comes down to the due diligence of the landlord, the person actually looking at the tenant on a case-by-case basis, looking at their eviction history, their credit scores, looking at the cash in the bank, looking at where they live, looking at their car, really just looking at that individual and making a right decision. Since last year, the HCV program saw a $2 billion increase in funding to help maintain housing vouchers for families across the country. Since 2022, this budget allocation has grown nearly 20%, over $4 billion, allowing the value of the Housing Choice Voucher to keep on pace with rising rental costs and helping to make sure the voucher holders can continue to access neighborhoods of opportunity. This announcement is a continuation of the Biden-Harris administration's effort to increase the housing supply across the country for those who most need it. So this is my prediction. Entry-level housing in a lot of markets is going to see a lot of demand in the next couple of years. Section 8 is going to grow, and the job market is going to likely fall into really, really big problems, and people are going to need places to live, and the government's going to subsidize it with taxpayer dollars. This is the inevitable that I see unfolding alongside major inflation in the next 5-10 years. I think the dollar is going to continue to buy less and less, and owning hard real assets will probably be a better place to be than this fiat dollar that we're holding on to. Let's have a conversation about this below. And I believe I might even do like a real estate series. I have a goal of owning 20 houses to close on 20 inside roughly the next 90 days. So I'm looking and I'm writing a lot of offers almost daily. I'm very conservative with the price points in which I'm willing to pay for these properties. That's why 2 of them I bought directly from the government, and another was another distressed seller, another is another distressed seller. Like, I'm looking to essentially steal these properties. If I'm not getting them at an incredible price point, I won't buy it. So you can watch what I'm doing here by subscribing, and for more information on today's video sponsor, you can click the link in the description just below the video. Catch you next video.